I'm talking about people today. Fast forward 3 years, I might not be so bullish on the fact that Bitcoin is the best thing to own for that particular starting point. Yes, it's going to be useful and all those sorts of things, but you can't be so dogmatic because the situation might warrant that. Okay, well, Bitcoin is just a currency.
Hey guys, welcome back to Everyday Finance. In this video, Arthur Hayes discuss about Bitcoin. According to Arthur Hayes, if you purchased Bitcoin at $27,000, it will increase to $7,500, and you will be able to sell it for that amount for $750,000. You go purchase some farmland, a profitable asset, or anything else that looks fantastic on you if you're the Muppet who paid $750,000 when the party ended was obviously not that great, so everything path dependent. So let me speak to some folks in the present, fast forward to 3 years from now. Arthur Hayes might not be as confident that Bitcoin is the best asset to own at that specific moment in time. Indeed, it will be helpful and valuable in all those ways. But you can't be too dogmatic since the circumstances may dictate that. Well, Bitcoin is just a form of money, and lots of things Arthur Hayes discuss, so please watch the video to end, and share this video, and subscribe our channel Everyday Finance. Thanks.
Well, it depends on what price you bought Bitcoin at, right? If you bought Bitcoin at 28,000, it goes to 750. You sell it for that amount, sell it for 750,000, and you go and buy some farmland or some productive asset or whatever. Great on you. If you're the Muppet who bought at 750,000 when the party ends, probably not so good. So it's all path dependent. So I'm talking about people today. Fast forward 3 years, I might not be so bullish on the fact that Bitcoin is the best thing to own for that particular starting point. Yes, it's going to be useful and all those sorts of things, but you can't be so dogmatic because the situation might warrant that. Okay, well, Bitcoin is just a currency. I actually need something, whether that's food or a place to live or whatever. Use those, undeserved fiat earnings that you've experienced over the past few years to buy something that's useful for you and your family to get you through the hard times.
How much time have we got? How much time have we got to buy Bitcoin? You say for those people who buy now, 27, 28, you should be safe. How much time have we got to buy Bitcoin? Is it like a month? Is it like a year?
I don't think Bitcoin's going to pass 70,000 until end of next year. So it's going to be choppy. It's not going to be a straight line up, but the euphoria when this narrative actually catches on, if it actually catches on, is going to be swift and sharp, and you're going to feel like a Muppet if you've got to buy at charts going like this versus when the chart was going like that.
Because let's go through a chart here. This is a fractal chart of the halving fractals. It kind of says that on the 15th of April next year, we should break this trend line-ish, more or less. I mean, again, this is just using halving fractals. Then it's usually like a slow and steady chop, and then kind of like a huge acceleration somewhere around here, and they're saying that would probably peak 518 to 546 days after the halving, which is a year and a half after the halving, which is probably just towards the end of 2025. How does this go with your thesis?
It's very complementary, right? Because I'm looking at a debt cycle where I'm saying the U.S., which leads the world in terms of fiat money printing, largest economy, reserve currency, all that kind of stuff, they will roll over like an average amount of their debt. The average maturity is 3 years-ish on U.S. Treasury debt. So there's about $7 trillion worth of debt that matures by the end of 2026. So there's a stock of stuff that needs to be printed to buy that debt, right? So I think that a end of 2025 into the 2026 timeframe sounds about right for the top of the cycle, because it's when all the debt's being monetized to create the party. And then we're like, okay, well, what the fuck do we do now, right? There's not going to be the need to print all this money because we've refinanced the debt out into the future.
According to Arthur Hayes, all of this is simply you employing Haring fractals. Usually, there's a slow, continuous chop, followed by a sudden, significant acceleration here. They estimate that would likely peak at 518 to 546 days after the Haring, which is about near the end of 2025. And which is a year and a half after the Haring. Theory is highly complementary. Arthur examining a debt cycle in which Arthur Hayes assert that the US is at the forefront of they will roll over everything related to the world's greatest economy, reserve currency and fiat money production. Like an average amount of its debt, the US Treasury debt has an average term of 3 years, meaning there are roughly $7 trillion of debt that will mature by the end of 2026. So there's a stock of goods that must be printed in order to pay off that debt. Hence, Arthur believed that the end of 2025 and the beginning of 2026 seem to be about correct for the cycle's apex, because that's when all the debt's being made profitable. Throw the party. And then, well, what the heck do we do next? Correct. Since we've refinanced the debt into the future, there won't be a need to print all of this money that makes some sense. Let's back to the Arthur Hayes interview.
And I presented it at Token 2049 called Double Happiness. And it was about the bull market that we're about to experience, that we're on the cusp of. And it's a combination of the most amount of money ever printed in human history in a 2 to 3 year period, and the commercialization of AI and how that relates to crypto as the most transformative technological development that's ever happened in human history. And these two things combined are going to produce the most epic bull market in crypto and just about everything else that's sort of a risky asset around the world. Okay, so actually, I did. Go ahead.
No, go ahead. You say actually.
So basically, I gave the presentation on stage about, I think, 2 weeks ago in Singapore, and now I just finished writing the essay that should come out in a few hours. And so I had a lot more time to do research, to actually like put numbers and charts and everything to back up what I was saying. And I did the research into like how much debt is actually going to be issued by the US, China, Europe, and Japan. And it surprised me to the upside. It's just so ridiculous how much money is going to be printed over the next 2 to 3 years, while the central banks try to save the government bond markets, that I guess I'm just so bullish on, Bitcoin, crypto, certain stocks, so bearish on fiat just because there's going to be umpteen more trillions of dollars of it, that's kind of where that prediction comes from. So the market's right. There's too much debt, and people are like, why the fuck would I want to own a 20-year bond of any government, right? When they're going to have to print so much money between now and 3 to 5 years from now just to roll over existing debt, right? It's not like we're paying anything back, and to fund more government spending, because obviously coming out of COVID, everybody around the world is addicted to stimulus checks in one way, shape, or form. Now, it doesn't matter whether you're China, the US, Japan, Europe, everybody, the governments are spending money on stuff. So the bond market's like, why do I want to own a 20-year bond when the supply of this stuff is about to go exponential? I don't want to own it. I'm selling it. And you're seeing this in the market. People are like, I don't want a 10-year treasury at 4%. I'm going to start selling it. Maybe people come back in the market at 5%, 6%, 7%. I don't really know. But when you have bonds and the convexity that's embedded in a bond, when it's close to 0% interest rates, the losses are exponential. They increase exponentially in a nonlinear fashion. And so that's what we're seeing. We're seeing people who have to sell bonds and continue selling bonds because they have all this risk in their portfolios that they weren't accounting for, because they could never believe that the short end and the long end rates could rise at the same time, and the long end rates would rise faster than the short end rates. Because every single time that started to happen before, the central banks have come in and slammed the market with free money. Now, right now, they're trying to act all tough, like they actually care about fighting inflation. So they're saying, no, higher for longer, raising rates, tighter monetary conditions, all that kind of stuff. And the market's like, great, I don't want any fucking part of this bond market. Get me out of here. And that is what's going on right now. And so, yes, I think we are on the cusp of some sort of part of the financial system going belly up. I think I just posted a chart on Twitter. If you take a look at the regional banks index, it's only 8% higher than its lows in April, when 3 banks went bankrupt in the span of 2 weeks. Right? So we're back at crisis levels because interest rates are starting to rise.
Arthur Hayes spent a lot more time conducting research and really creating charts and data to support my claims, stating that Arthur conducted research to determine the true amount of debt that will be released by the US, China, Europe, and Japan. And Arthur Hayes was pleasantly surprised by the amount of money that will be printed by central banks over the next 2 to 3 years is plain absurd. Attempt to rescue the government bond markets. Arthur supposed my excessive optimism is due to you, because there will be many more trillions of dollars in fiat currency. Some Bitcoin cryptocurrency stocks are extremely negative. That's sort of where that prediction originates, in terms of cash. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.